ahead of these results, we want to bring in Ross Gerber, a Tesla investor, also Gerber Kawasaki Wealth and Investment Management CEO. It's great to see you again here, Ross. So, of course, the big question, one of the key metrics to watch in this report is going to be profit margins. What are you expecting to see? How big of a hit do you think Tesla could potentially take as a result of these price cuts?
I mean, it's so hard to call, because it's like they change prices like every, few hours and it's usually down. And we know that costs have come down with Tesla. But from what, I was told from Elon and Tesla was that it does take some time for costs cuts to sort of trickle through the supply chain. So we expect much lower input costs for Tesla as the year goes on, but certainly not in Q1. So, it's hard to get excited about the margin numbers. So we'll see. I'm trying to understand the logic behind all these price cuts. And certainly if I was going to buy a Tesla, and I would kind of be worried buying one thinking he might cut prices again next week. So, I'm just a little confused by the whole strategy at this point, and we'll see what the margins are, and hopefully they'll articulate what this strategy is.
Hey, Ross, you kind of alluded to this on Twitter, but what do you think the impact is from a consumer perspective when you see not just 1, 2, or 3, but 6 price cuts, and how that impacts demand?
Right. So this is an issue that I don't think Elon's thought about, which is that buyers will actually not buy the car thinking that it's going to get cheaper. Like I talked to somebody who bought a car like 4 months ago and they paid over $60,000 for their car, and they're quite unhappy. They're just really unhappy. And for a good reason, because the prices dropped 30%. So if you kind of think the price is going to drop, like why would you buy a Tesla today when they're going to be cheaper in 2 weeks or a month? And so it creates the wrong type of consumer behavior. Typically, when you run a sale, what you do is you say limited time only, we're going to drop prices by $5,000 for a month, get it now. That's typically how you market a product. So Tesla's gone into what I call negative marketing, where the CEO works very hard not to sell cars, and people just buy cars based off price.
So, Ross, how worried do you think Tesla then is about the growing competition within the EV landscape, and how critical is that sub-30,000 vehicle from Tesla?
Well, I think Tesla's goal for the sub-30,000 vehicle is more relative to scale and becoming a little bit more like Toyota, where they're looking to serve the low and mid-end EV market in mass scale versus the high-end market, which is clearly they're seeding. So when you're talking about competition, you have to divide it into competition on price and competition on quality. And so in my mind, they're giving up the high end, and so they're really looking at a few key competitors, whether it's Volkswagen or the Ioniq is doing very well. I think it's a Kia or a Hyundai, and then you've got a whole host of other companies from Ford on through that are coming out with EVs that are decent. But the biggest issue is they've been unable to scale. And so really Tesla's biggest advantage today is that you can get a car today if you want to buy a Tesla, where a lot of the EV competitors haven't scaled as efficiently, but that's changing. So Tesla has competitors here in LA. People are making those choices. And if you go to a charging station today, you'll see 6 or 7 different types of electric vehicles. And they're all quite good now versus they all used to be quite bad. So Tesla's going to have to accept this new reality as well.
Yeah, the competition is really catching up. We've talked several times about the Twitter distraction for Elon Musk, and here we are months later, and he's still very much consumed by the social media platform, talking about launching Truth GPT, whatever that is.
Right.
Is Tesla fully autonomous at this point? Do you feel like he's behind the wheel?
Well, one of the things I do want to separate is what's happening at Tesla and what's happening with Elon. And I was just at Tesla, and I think the team there is supremely confident and competent. And I think their business plan is excellent. I love the company. My biggest issue is marketing. It has a lot less to do with execution, the technologies that they're building, the future vehicles on track. So Tesla's a great company, but the fact that the CEO only works there, part-time is certainly a disadvantage to when Elon was 100% focused on Tesla. I mean, it's just there's only so much time in a day. But I think Tesla investors and the stock have come to terms that, Elon is sort of, I would say, a part-time CEO at Tesla, and the team at Tesla is quite good. And and they have made me happier with the succession plan, getting JB Straubel on the board, promoting Tom Hsu, the head of auto production. So I think there's a pretty good team at Tesla, and they don't really need Elon there. It's not ideal, but they're doing a great job.
You don't think they need Elon at all?
No, I didn't say at all, but if they needed him, clearly Tesla would be not producing record amount of vehicles. But I think what it is Elon's management style would not conform with the style of all the other CEOs of the major companies I've invested in, who are 100% focused on that company, whether it's Bob Iger or Jensen Huang at NVIDIA. I can't think of any other situation like this that I've ever seen in business. I think it's a unique management style, and I think he's got really competent people running these companies in the most part, and that's the reality. But does that affect Tesla? Yeah, it does, and I don't think you can minimize the impact of the CEO, who's obviously a genius engineer, not really being there most of the time.
Ross Gerber, I've been spending this whole interview trying to figure out what that T-shirt is behind your left shoulder. What is that, man?
It's the GK Fund T-shirt. It's our Rebound Tour T-shirt. We started at the top of the market, so last year was pretty tough. So now we're rebounding hard. We've had a great year so far in our fund, and we highly recommend investing for growth for investors. We think the market's turning, and this is a great time.
Good answer. Play that guitar for us next time.
Yeah.
Ross Gerber, Kawasaki. Good to see you. All right.